Hi, business owner. Do you have a rental properties you want to sell it and perhaps get another one, and you're kind of afraid how much taxes you're gonna have to pay on the gain? Well, have you heard about Section 1031 that allows you to actually defer all the gain? Hi, my name is Catching. I'm a tax accountant. Today, I'm gonna go ahead talk to you about what is Section 1031, how you can apply it, and what are the limitations. Now, let's jump right into Section 1031 exchange. And what's qualified for Section 1031? So it has to be investment property, trade and business, and real estate property. So after the TCJA Act, it's only limited to real estate property. So let's say you have a rental property that would qualify. So for your own personal residence, it's not gonna qualify. And the requirements. So you can trade US to US property. And foreign country, let's say you have a UK property, you can go ahead trade with a property in Australia, but you cannot trade UK property with US property. And how much gain can I defer? And what is the new basis of my property? So let's look at an example here. So let's say your old property valued at $3 million. You purchased the property, like let's say 10 years ago at $2 million. So if you sell the property today, you're gonna have $1 million gain. If you're gonna go ahead sell it, let's assume 15% long-term capital gain, you have $150,000 in taxes. So what happens if you apply Section 1031? So your old property worth $3 million. You find a like-kind property at $2.8 million. And the other party is gonna go ahead give you $200,000 to make up the difference. So that $200,000 is gonna be a boots, and boots is gonna tax at ordinary gain. And the $1 million that you have is gonna go ahead get deferred. And what is the new property basis? So for simplicity of this example, I'm not gonna go ahead include depreciation. So the formula look like this: the cost of a new property minus deferred gain. So the new property is $2.8 million and your deferred gain is $1 million. So your new basis will be $1.8 million. Now let's look at example 2. So your old property value at $2.8 million. You purchased 10 years ago, it was $1.8 million. If you sell the home today, you're gonna have $1 million gain. At 15% long-term capital gain, you're gonna have $150,000 in taxes. So what happens if you do Section 1031 exchange? So the old property worth $2.8 million. You find a new property worth $3 million. And you personally put down $200K to make up for the difference. So the gain of $1 million is gonna go ahead get deferred. So what is the new property basis? So again, the cost of the new property is $3 million and minus the deferred gain $1 million. So your basis is $2 million. And let's look at another example. Let's say your old property has a $200,000 loan. You haven't finished paying off yet. And the other parties agrees they're gonna go ahead consume that debt for you. So that $200,000 debt is considered as boots. So it's gonna go ahead tax like cash, go ahead gonna tax at ordinary gain. So the $1 million still gonna go ahead get deferred. So let's look at the timelines. So the IRS give you 180 days to complete the Section 1031 in total. So day 1, you're gonna go ahead close your old property. You have 45 days to identify the new property and 180 days to go ahead close the new property. So it's not 45 days plus 180 days. The whole Section 1031 transaction has to complete in 180 days. So how can I do that? Well, you're gonna go ahead find a qualified intermediary to help you complete the transaction, and make sure that the cash, the proceed, you will never touch it. So as soon as you touch it, it's not gonna be Section 1031 exchange. So the qualified intermediary is gonna go ahead, collect the cash, and go ahead complete the exchange transaction for you. And the IRS has Form 8824 that you need to fill out. So let's say you relinquish your old property, you're gonna go ahead have the 1099-S. And for Section 1031, IRS is expecting you to have Form 8824 with it, so that to show that you have the Section 1031 transaction. So within that form, you need to include the dates that you relinquish the property, the dates that you identify the property, and the dates you replace the property, and settlement paper. So the form looks like this. So it does require you to put the dates exactly. And the Section 1031 is not for people that are house flipper or dealer, because the house is gonna be inventory. So again, Section 1031 is only for investment and business, and the house has to hold at least for a year.